Welcome to another edition of the Chicks on the Right show, where we talk to our BFF and sponsor of the show, Zach Abraham from Bulwark Capital Management. Okay, Zach, we're going to talk tax cuts today.
All
So now
right.
that now that Trump is back in office, well, he will be back in office in the next couple months. We're going to have a Republican led House, a Republican led Senate, and advisors are predicting an extension of the 2017 Tax Cuts and Jobs Act, the TCJA, which was the largest tax code overhaul in 30 years. And it provided a lot of relief, a lot of
Yeah.
tax reductions for businesses and individuals. And most of those benefits are set to expire at the end of 2025.
Yep.
I imagine that some folks that even hate Trump are possibly stoked that he won just from an economic. I'm talking to you, Bernie Sanders, are kind of excited about him maybe, reinstating some of those tax cuts. And so I guess what do you think about that? And then also it's a two-pronged first question. What do you think about the tax cuts? And then what do we get from Trump tax cuts possibly getting extended?
Yeah. So the I I think the extension of the corporate tax cuts are baked into the cake, and I think that that's probably one of the biggest underpinnings for the market rally that you've seen since the election, right? So stocks had to start pricing out the possibility of that tax break going away, and then they had to
Hmm.
price back in, the reality of that tax cut. So that's probably been a big part of that run that we've seen in markets, and I think that and look, that's a good thing, and it really doesn't matter what you think about that tax rate when you start talking about corporate tax rates. um, I think it's hilarious when people say that the rate needs to be higher, and I look at them and I go, based on what? And they're like, well, companies make too much, and I go, stop right there. Okay, what you need to look at is you need to look at the international average corporate tax rate. Okay, because if you are above that, you are incentivizing employers to leave our country. Okay.
Yes. Yes.
So what you think they should pay really
Hmm.
doesn't matter, right? We
Right.
cannot have a corporate tax situation that is non-competitive with the rest of the world. So you just can't.
Right.
So
Right.
so whatever that average is, you need to be right around it. If that
Mhm.
average was like 20%, could you afford to be at 22? Yeah, probably, right? Because there's not a big enough relief there. But if you're 30 here domestically, and by going to Ireland, they can be at 20. If they're going to save 50% in taxes per year, like,
Mhm.
buy them a going away present now because you're going to need one, right?
Yeah, yeah.
It's just common sense. I am really hopeful on what they can do on the personal tax side of it. I think a lot of that's going to be kind of what they're some of the stuff they're talking about doing with the IRS is incredible.
Yeah, because
Um,
that was one of the because that's what I was gonna ask you is a lot of people will say, "Only the rich benefit from this," because I'm
oh,
not rich. I'm not rich. So it's like, so people that, watch our show and everything, they'll be like, "Okay, so what about like what about the normie? How
yeah,
are they gonna what's the benefit?" Because I mean, it's like, okay, they're not gonna a company's not gonna leave, right? But then how does that affect somebody who is not, say, rich? Because this is what liberals say, right? It only like helps the rich people, Zach,
yeah. I mean, or the people that work for that company, right?
Right.
So, right.
Right.
So
Exactly.
yeah. And I think you need to, like I said, if we want to really tackle these situations, it's one of the things that drives me nuts about liberals is they want to talk about fair and they want to talk about
Right.
equity. And I'm like, okay, so
Mhm.
now that we've had fun with nursery rhyme time, let's step over into the adult part of this conversation because fair and equity have nothing to do with it, right? So
Exactly.
what you think is good, nobody cares. Okay,
Mhm.
if you're not willing to give them a 20% corporate tax rate, there's plenty of other corporate companies that will, countries that
Mhm.
will. They'll be happy to do it. Their populace will reap the rewards and all that kind of stuff.
And
On the
businesses and if businesses benefit, it benefits everybody that works for that business. It trickles
yeah,
down. I mean,
well,
why can't people see that?
and here's the other thing that liberals really don't see. Okay, one of the biggest things that you can do for wages, the common man, and small business. Remember, small business still employs. I think you're at 60% of the jobs in this country are provided by small business. So
Mhm.
remember, most small businesses do not directly benefit from those corporate tax cuts because those corporate tax cuts are reserved for C corps. Right? You
Yep.
got to be a much larger corporation. Like for instance, Bulwark is an LLC operating as an S corp. Okay,
Yes.
that's what most small businesses are.
Mhm.
Um, so when you start talking about regulatory cuts work a lot different than most people think. Regulation cuts tend to be the most positively impactful for the smallest businesses, not the other way around. And it's because those regulations. An easy way to think about it is if you're a global corporation and in one of the 30 countries you operate in, your tax rate goes up 25%, right? You can just move things around the globe a little bit and offset that charge,
Mhm.
right? If you're a small business that operates only in that environment where tax rates just went up 25%, you're stuck. Your labor
Right.
costs just went up 25%, right?
Totally. Yeah.
So regulations, it's taxes tend to benefit, tax cuts tend to benefit the people that make the most money because they get the largest nominal amount of savings.
Mhm.
Regulations tend to benefit the smaller company. They benefit everybody, right? But
Yeah.
largely speaking, it's going to be, because like if you have a regulatory like pullback in regulations, it's not going to really impact JP Morgan too much because they're going to have that team of lawyers on standby all the time, no matter what, right? Whereas
Mhm.
if the impact it has on Bulwark, it can be quite a meaningful impact.
Yeah.
So I think that's the biggest part of it, right? That regulatory rip down, if they follow through with what they're saying, and they sure seem pretty determined to do so. Those regulation cuts might as well be tax cuts for small businesses.
What about downsides? Are there any downsides to this? Like,
I mean,
are there downsides to, like, him doing tax cuts? I mean, would you s or is it just all positive? Would you see it as all positive?
well, I mean, look, you're not going to. There used to be a myth, and this will upset some people when I tell it to them, and I would tell them take it in stride because I had to. It's a myth I used to believe in as well, which is that tax cuts always pay for themselves, meaning the stimulation they provide for the underlying economy offsets. It's not true. Mathematically, it's not true. So taxation is really a maximization game. Um, does it, are these things helpful? What are the end impacts? Yeah, I mean, these things are going to be overall helpful to the broader economy. I think that you've got bigger things in play though, like I mean, the type of regulations they're talking about slicing or cutting out would be massively beneficial for productivity for so many different things. Tax revenues, a lot of those corporations are going to have higher profits, right? So you
Mhm.
got a scenario where a government could be paying less in terms of money going to the regulator, but because the underlying corporations in those sectors are generating higher profits, right? Government's spending less, but it's also taking more in on taxation side of it. But
Yeah.
bottom line is moving around tax levels here and there, that isn't going to fix our problems on the debt side of things. On the deficit side, they're too large, meaning you're not going to fix any of these things on the margins. If we want to be realistic, if somebody wants to come out and really level with the American people about what we're going to do with the debt, here's what they'd say. They'd say, look, we're going to try to eliminate as much government waste as we can and cut corners where we can, right? We're going to save what we can and we're going to try to be as sane as we can. But spending has been so out of control for so long that if we were, it's sort of like taking somebody that's a heroin addict, right? You want to use methadone and you want to weed them off it
Mhm.
gradually. If you just go cold turkey, chances are pretty good that you lose the patient.
Right.
Same is true in our scenario. What you've got to do is you've got to be stimulative enough to the underlying economy where your wage growth outpaces the inflation rate. That should be the goal because the only way we're going to get out of here, out of this position, is with higher than normal inflation. And the reason I say that is there's a couple ways we can deal with debt, right? We see it on our own personal balance sheets. Let's say we go buy a house, we put $250,000 down and buy a $750,000 house. Okay. Or let's say we put $500,000 down and buy $1 million house. We've got 50% debt to equity, right? We can either pay that loan down really aggressively or that house can go up in value. If the house goes up 50%, my debt to equity just got a lot better, right?
Mhm.
Therefore improving. And that's kind of what we need to do here, as perverse as it sounds, is we kind of need to let inflation run hotter for a period of time and let asset prices go up. So by default, it sort of shrinks the debt as a percentage of the overall asset base.
Yeah.
And either way, because if you don't do that, the impacts are too negative. Government, we're running 7% deficits. If you balance the budget right now, we'd go into a depression.
Oh my
So
God.
yeah,
Yeah.
I mean, it's become too big of a problem. So you're just gonna have to take a longer term trajectory out of this thing.
Okay, I did like that. I didn't want to end like we don't want to talk about that. I just want to listen. I want to think to myself that we're all going to make a lot more money in the next 4 years. We're all going to do better, and we're all going to need somebody to ask, "How do we handle this money, Zach?" And that's where you come into play. So like, how can people get in touch with you, Zach? How can people find you and to get information from you as to how to handle their money and to invest it?
Yeah, no, go to bulwarkcapitalmanagement.com. We've got our last roadshow of the year coming up Thursday. What would that be? Thursday the 28th, I believe is what that would be. No, or no, excuse me, Thursday the 21st.
And you also have a radio show, right? You do a
Yep, radio show every single week on and we do a podcast segment every single day called the Daily Dots, where we discuss everything that's applicable that happened in finance and politics. And
Yeah, you have a
you know,
lot more positive stuff to talk about now.
yeah, no, and look, I don't want to overcrowd this. Look, I think that we are going to get the best. In my opinion, we're going to get the best economic outcome possible.
Yeah.
And when you talk about the regulatory cuts and things like that, I think they're going to be extraordinarily bullish for wage growth. And here's the deal: if you've got an economy that's averaging 6.5% wage growth, and you're running 4% inflation, which is above trend, that isn't a bad scenario. That means that our wages are growing faster than the cost of goods around us. That's
Great.
that's a great outcome. And that's better than what we've had for the last several years. So I think it does look good.
It's awesome. I think it's great news. I love it. It's better than what we would have had we had
Oh,
more of the same. Oh my gosh. So grateful.
Yeah. Well, I mean,
So
I was getting ready for litter boxes in every bathroom, you know. I mean,
I know, us too.
Yeah.
So it's all good. It's all good. So yes, everybody check him out. KnowYourRiskRadio.com. Thank you, Zach. I appreciate it.
You bet. Thanks for having me. Fun as always.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.